Good morning and welcome to today's Five with Fitz. Obviously, I'm dressed a little differently than normal. That's because it's been a crazy day around here between TV, the trade deal with the UK, the market movement, meetings in Switzerland. I mean, wow, my goodness, anyway. So today you get the formal me, for better or for worse. Speaking of which, let's talk about that. I've said two things consistently about tariff tantrums. Number one, this too shall pass. And number two, the real issue isn't the tariffs themselves, but the uncertainty associated with them. And now there's a deal on the table with the UK. It's the first of many. And that brings to mind a very, very important point, something you hear me say almost to the point where I sound like a broken record. You've got to be in to win, or you won't win. Think about it. Here's my playbook, meanwhile. Number one, innovation has never failed to produce profits, ever. I was honored to be back on the Cow Guy Close this week, the award-winning show on RFD TV, hosted by my good friend and longtime colleague, Scott the Cow Guy Shellady. Now, Scott and I covered a lot of ground in our latest sit-down. If you got a few minutes, I think you're going to find it time well spent. You can watch that video elsewhere on my channel. We talked about whether or not the rally still has legs or if it's running on fumes, whether a recession is actually in the cards or just being whispered into existence by analysts with the attention span of a mosquito, or at least 90 days. Perhaps more importantly, we also explored a very powerful investing truism that many folks miss. Innovation has never, in recorded human history, failed to produce profits, ever. And history couldn't be more clear on that. So like it or not, how you feel about it or not, those things are moot. History is very clear, and that's what you want to focus on. Now, number two, China is at the table, sort of. The headlines are filled with optimism over what apparently are upcoming U.S.-China talks set to kick off in Switzerland later this week. And Wall Street, not surprisingly, is already trying to price in progress. Now, the thing about this is, right, let's not get ahead of ourselves. These are not tariff talks in the classic sense of the term. These are de-escalation talks, not negotiations for a sweeping deal. Now, Treasury Secretary Scott Bessent and Trade Rep Jamieson Greer will sit down with Chinese Vice Premier He Lifeng. But even Bessent admitted the goal is simply to agree on what to talk about. That's how the Chinese operate. They operate because they want to think strategically. We operate in terms of goals. And it's very, very hard if you spend any kind of time in and around China or negotiating or doing business with China to understand what this really means when it comes to discussions or negotiations. You got to agree what the boundaries are because they'll change them later and we want them first. The two styles are about as mutually incompatible as you could get. But I'm optimistic we're going to find a solution. Meanwhile, what's going to happen is more about optics than substance, at least for now. Investors should be watching for breakthroughs and tone specifically. Not, any shift towards stability. Even a modest one could lift sentiment in sectors like industrial, semiconductors, and logistics, all of which have been beat up something fierce lately. It's especially important because markets have been rattled by rising protectionism. Now, again, don't expect a miracle, but if the tone cools and tariffs edge down, that could very well be the opening on a broader reset and a potential tailwind for globally exposed names. Number three, Chairman Powell. We're making it up as we go along. I know, harsh, but you know what? In my opinion, well deserved. As expected, the Fed held rates steady at 4.25 to 4.5, so no surprise there. But the tone, that's where things got interesting, at least to me anyway. Uncle Powell and his crew flagged rising risks on both inflation and unemployment, which is Fed speak for we have no idea what's coming next, no idea what to do about it, but it probably won't be pretty. I mean, I don't understand how these guys have jobs. They're not stupid. That's not the issue. My contention is they're playing with broken models that don't reflect the economy of today, but are still reflective of economy 120 years ago when they were first constructed. With GDP shrinking 0.3% in Q1 and Trump's tariffs taking in, traders are now tossing around the dreaded stagflation word like it's 1980 again. Job growth's hanging on and inflation's dipped, but that balance is fragile and it won't take much to knock it off the beam. I don't think that's going to happen, but you got to take into consideration that the same crowd that once begged for higher rates is now drooling at the thought of cuts. They're already front-running Powell, hoping he folds under the pressure. He probably won't, and makes it cheaper to borrow all the juice they need to lever up and go shopping, which he doesn't want to do either. Watch the U.S. 10-year because that's the tell. Meanwhile, I'm going to be sticking with the world's best CEOs. Thank you very much. On that note, number 4, CrowdStrike layoffs signal strength not weakness. Cybersecurity giant CrowdStrike just announced it's trimming 5% of its workforce, about 500 roles in all, in a bid to streamline operations and control costs. Now, many investors panic at the word layoffs, assuming it signals trouble. This isn't about weakness, though. Don't make that mistake. It's about being more efficient. In fact, CrowdStrike reaffirmed its full-year revenue forecast, $4.74 billion to $4.81 billion, and the company maintains strong profit expectations. Both of those things are key because cuts are being made in non-core areas while hiring continues in customer-facing and product engineering roles, exactly the kind of hiring that drives growth, not overhead. So trimming non-essential roles, which is what's happening here, isn't just about efficiency, but it's an action that is likely to boost both the top line and the bottom line. Remember what we're dealing with here. Cybercrime is projected to be a $24 trillion problem by 2027, just a few years from now. And my take is that it won't be long before CEOs start writing dang near blank checks to the companies helping keep them safe. Now, I think you need to invest accordingly, and it's a very simple proposition. And I felt that way for about the last 5 years. And not for nothing, CrowdStrike has returned 466.57% over the past 5 years. Well, the SPY, a popular ETF choice, has turned in 110.91% over the same time frame. Still great, but not greater. And that's what you want to think about. It's not that diversification is going to kill you. It's that diversification is going to hold you back. Most investors simply don't own enough of the right companies. And by the way, if you want some help sorting out the wheat from the chaff when it comes to companies like CrowdStrike, I'd love to toss my hat in the ring, and you know where to find me. And number 5, I hate to bring this up, but I've got to. The impersonators are on the loose again. This is so frustrating, and I'm sorry for the hassle. Right up front, I'm just sorry for the hassle. It's come to my attention again that there are scammers out there pretending to be me on Instagram, on X, where they're sending private messages and other channels. Let me be really crystal clear one more time. I do not offer one-on-one coaching. I do not run copy trading or trade cycle optimization schemes or whatever other happy horse poop they're calling this. I will never, repeat, never DM you asking for money, access, or participation in a private group ever. These messages, if you're getting them, are 100% fake. They are not from me, and they are designed to scam you out of your money by impersonating my name, likeness, writing style, and yes, investing acumen, even using AI to clone my voice. If you see or get a message like this, do not engage it under any circumstances. Instead, please block and report immediately, including to law enforcement if necessary. One of the things these scammers do is block me from seeing them. So I can't help you unless you help me. So please do so. If it's not me, if it's not coming from my verified channels here in the 5 with Fitz, YouTube, Instagram, or X, or even directly through One Bar Ahead. So bottom line, again, sorry for the hassle. Thank you for staying alert and helping protect my 6, as well as everybody else who pays attention to the 5 with Fitz and One Bar Ahead. Now, just a mode of irony here. If the criminal individuals or the malintentioned individuals engaged in such behavior would put even half of all that energy into legitimate businesses, I'd consider investing. Bottom line today, the world will change with or without your approval. So will the financial markets. So focus on what you can control, like tactics, timing, and which stocks to buy, etc., instead of worrying about what you can't. As always, let's make it a great day. You got this, I promise. And as always, I'll see you tomorrow. Thanks for watching. Make it a great one.